Morning, everybody. How are you all doing? So I'm having to look over here today because this monitor blew yesterday. Really weird. I had this weird line appear down the edge of my monitor and it just went and spread across the monitor and it's dead. So I just ordered a new one. So all my stuff's over here now, which is weird. I'm used to looking over there to see what's going on. So I'm just checking my mic's working over there today. Useful bit of information for you. Right. Sorry, now I've got this is weird. I'm not used to this. I'm left-eyed. Morning, everybody. Callum, Harold, Gregors, Monkey, Mark, Henricas, Mumo, Virginia, Ryan, Roger, Ismet. How are we doing? So it's Friday, last day of the week. Also, more importantly, last day of the month. Excuse me. It is last trading day of the month. We are in August, January, February, March, April, May, June, July, August, September. So it's not the end of quarter. I always have to count that. I'm useless with that. It seems to have fixed your sound issues. Excuse me. What, having the monitor blow? Unless the Logitech stuff has fixed itself. I doubt it. No, still not working. So, don't know. If sound quality is different today, I don't know. So I got a frog in my throat this morning as well. So yeah, it's the last day of the month. So institutional traders tend to work on monthly and quarterly targets. So if they've got levels they want to hit, profit targets they want to hit, you quite often find end of month you tend to get this big move, sort of multiple ADR moves basically to get themselves over the line so they get their commissions and the reports look good. So it can be a busy day, end of month and end of week obviously quite often is fairly busy anyway. So today's news wise, we've had the CPI for Japan come out this morning, which was higher than expected. Obviously they are starting to move towards interest rate control of inflation, so we'll have to wait and see how much that impacts the yen moving forward. Doesn't seem to have done anything today. If anything, it's weakened the yen. Look, so yen pairs a little bit weak off of the positive inflation. So yeah, it's still not affecting it in any way, shape or form as usual. This morning we've got the flash estimates for CPI year on year coming out at 10 o'clock. So we would expect those to be negative. So expect more bearish movement in the euro this morning. The forecast is 2.6. Sorry, the previous is 2.6. The forecast is 2.2. If you look at the CPI for Germany and for Spain yesterday, they were both down on forecast. So this flash estimate is an amalgamation of what their estimates were for Germany, France and Spain and other areas of Europe, but those are the three main ones. As those were both misses, you would expect to find a miss on this. So I'd expect this to come out somewhere around about the 2.1, maybe 2 level, meaning that they will probably sell off more euro. They may have done that move yesterday because we had quite big moves on the euro yesterday. So it may be that they've already factored that in, but we'll have to wait and see. So 10 o'clock this morning, that comes out 2 hours after market open. We've then got this afternoon GDP for the CAD and PCE for the US. So those are forecast to be roughly as expected. So that's the rest of your news for today. Overnight news, we've had the French CPI came out a little bit of an uptick. So that's obviously the opposite side of what we got from Germany and Spain. So it might even that CPI out, but we'll have to wait and see. So may well get a fairly decent move this morning on the euro. Other than that, overnight, wasn't a great deal. We've had Suzuki talking bits and pieces. We had Australian retail come out lower than forecast, but if you look at the Aussie pairs, didn't really do an awful lot. So very, very little movement from overnight news. There's a load of Japanese stuff there, which is the CPI we looked at a minute ago. So that's pretty much it. No more movement or news coming out of the Fed or out of the Bank of England. So we're just waiting for stuff, basically. So ADR wise today, there's nothing. As you can see, ADRs are totally flat. We looked at the Euro CAD yesterday. That was your weekly range hit. So we looked for that reversal that was starting yesterday down there from the Monday high. So it's 125% of its average weekly range hit. It's exhausted. Beautiful upside target here. We've got a nice monthly target there as well. So 50% retracement on that leg potentially before it collapses. But if we get those weak CPI numbers this morning, probably going to disappear. So we'll see what happens. But so far, obviously, not an awful lot of movement today because we're waiting for the news. RSIs, flat on the hourlies. There aren't any hourly RSI extensions to look at so far this morning. Euro New Zealand, that was the big 4 hour, which I'm already long on. Third position taken on that yesterday there. So first entry was down there. Can't see it, it's behind my head. I keep looking over there to see where I'm pointing to, and it's not, it's there now. Yeah, but this is didn't get back above 50. Big sell-off going on at the moment there. So beautiful W pattern formation on the hourly forming. If we get this reversal alert today, that's the confirmation of the W pattern reversal. However, obviously, we've got news coming out at 10 o'clock, which could just invalidate that and it could drop dramatically. So we'll wait and see what happens. I've got longs on Euro. I've got quite a bit of Euro exposure long at the moment. So I kind of like the Euro CPI figures to come out bullish, but we'll see. So yeah, so Euro New Zealand, very nice 4 hour RSI extension. Beautiful level as well. So there's your propulsion gap fill. I think I looked at this one yesterday, if you remember, when we were around about one. I don't know what the ADR was yesterday. Was it an ADR yesterday? No, it wasn't an ADR yesterday, was it? 173. Yeah, it was. Yeah, sorry, it wasn't 150 ADR, wasn't it? So yeah, when we were looking at this yesterday, when we were around about the ADR 125 level, I think it was somewhere around there or something. Can't remember. But I said, watch this level here, this propulsion gap fill. It makes logical sense that they will go for the gap fill. And then they'll hit this accumulation. So this is a good, strong resistance area. That propulsion gap was a strong break of that entire week's range. So we're going to find buyers in this area. And once the buyers step in, they're going to want to take profits on the leg they've just put in. So we're looking for a fairly decent move. My targets, as you can see, are weekly low. So we'll be looking for limit orders at weekly low to trigger when we get back up there. So we need news this morning to move that. So we will see. Morning, everybody else. Tammy, Pot DJ. Price is the name of the game. It always is. It's the only thing we've got. Price. That's all this measures. Price. Goes up and down from price to price. Therefore, price is quite important, as you have quite rightly pointed out. The other extension we've got is pound New Zealand. I've got a long on this at the moment. So this is a 4 hour RSI extension here. I took this one yesterday, or rather the EA took this one yesterday down there. You've had a reverse alert on the hourly. We just sat around doing nothing yesterday. I did have on this a break-even stop. If you were in the live room yesterday, when we got that move back up into these highs, I put a break-even stop on it, just because I've got a bit too much exposure. I've got so much exposure on too much on everything at the moment, on the New Zealand dollar. So I took that stop off last night because obviously overnight you get massive spreads on the New Zealand dollar. It would have just stopped out on spread. So I removed the stop. We popped back down into the lows and pushed back up again. So should hit target on that today. My target, as you can see, is just shy of this propulsion gap, which is within ADR today. That's a 3 week low. Yeah, that's a 3 week low, which obviously is part of that propulsion move, the break of that level, but it's also the break of this level. It's the break of this whole support area, basically. So I'm assuming we're just going to pop and drop. If it flies, flies. But my target is where price has a possibility of reacting. So, which is there. So there you go. So there's your ADRs. Those are your RSIs. You've got a couple of other 10 period 4 hours, which are getting close, mainly euros. Market's about to open. 2 minutes. So these are all starting to reverse from yesterday. Anyway, so let's see what happens with that news this morning. I could really do with some bullish news on the euro, just to get me out of some of these euros that I'm in at the minute, but wait and see. Beautiful breaks yesterday across all markets. So FTSE clean, DAX was a clean break yesterday, straight up to 3R, and it screamed all the way up to about 7R yesterday. The FTSE, I basically got hedged on, and as I saw the DAX taking off, I closed the shorts on the FTSE and got a nice clean break even on that one. The NASDAQ and all the US markets yesterday, obviously we had that big 7-hour rally into the open and it just took off. So and there's the open there, sorry, on the Dow. So clean opening range break short on the Dow to 3R yesterday, clean opening break NASDAQ. So made over just shy of 1,500 yesterday on the 3 indices out of the 4. Didn't trade the S&P. So yeah, lovely moves yesterday. This market really come alive yesterday, and pretty much the day before as well, as you can see. So good volume and volatility coming. Look at what the hell? What was all that? A huge sell order just came in on the FTSE pre-market. Not getting a pre-market range break today, obviously, because that's screwed the ranges completely. So I won't be trading that. We'll be trading the opening range break if that happens. So I got pre-market break long on the DAX. So looking yesterday's high as a target to the upside, which is easily achievable today. Well within ADR. So there's yesterday's high. TP1 is at just above 3R, so that will be hit before we test the high, assuming we go long. We got a gap fill to do as well. It's annoying. These gaps tend to fill intra-session way more than 50% of the time, so there is a reason to short today. So if we go short today, I might watch that gap for exits on the short. Might be a tricky one if it doesn't break long, but we'll see. And then obviously second upside target will be above the high, and this is a new high. So we'll be off. So I'll be looking for ADR to the upside, which is all the way up here. But the most likely move on this today is going to be not massive movement before the 10 o'clock news. So we'll see where we get to with that. But let's just see what happens at the open. DAX is breaking long, which is nice. Morning, JC. Morning, Champagne. Champagne, you're naughty. Running signal services in my group. Everybody's entitled to make a living. So yeah, so we'll see how these go today. We'll go through the FX pairs as well today. I'm just going to do a full analysis of everything. I've decided at the moment I'm changing the way I get into trades for the rest of this year. I'm going to take manual initial entries rather than using RSI. I probably still will use RSI, but what I've done is I've set the EA up to not automatically get me into first positions on RSI from now on. So I'm just going to wait for all these previous trades to play out And then let me just turn off the orders because they'll make a mess. So yeah, so basically what I'm going to do, I'm still going to take RSI extensions. I'm just not going to let the EA get me in automatically. So I want to basically just use the position trader EA buttons to take first initial entries. So it's basically a case of RSI I don't have a problem with still using. However, I would rather have at the moment Confluence. RSI this year has been a lot less reliable in forex than it has in all previous years, because the market conditions are slightly different this year to what we've had before. So we're getting more extensions and more squeezes. So in things like this, where you get an RSI extension to the upside here, yes, it could well act at that propulsion gap, but I'd rather wait for it to stretch a little bit further and get to a monthly high where we know we've got more chance of getting some kind of reaction before it continues its rally, if it's going to. So rather than just blindly take RSI extensions, I'm going to hit the button myself, which will have the same, pretty much the same effect, except there'll be instances where I'll look at the RSI extension and go, well, it doesn't make sense for them not to do that. And obviously just getting in that one extra trade lighter, if you do get into a squeeze, is incredibly helpful. The other thing is, I'm finding with RSI 10, exposure is quite difficult to control, because RSI 10 obviously reacts a lot faster, which is what I've been using, RSI 10 on the 4 hour, reacts a lot faster. So when you get a big news event, I mean, that's not a news event, that was that ridiculous squeeze on the euro. But when you get a big move, everything gets extended at the same time. So you end up suddenly in multiple exposures before you get time to react to them. And then if it goes further, you have no choice but to manage those exposures or shut them out in loss. So I basically want to be able to control my exposure better, which is just easier using manual trade buttons. So all it is a case of, as usual, just listening out for the dashboards. So I'm just going to be reacting to alerts that I see coming up on the dashes. So, you know, that one there, for example, on the Euro New Zealand will have alerted. I'll look at it and go, yep, that's beautiful today. But that would have alerted all the way back here. Yeah. There's no reason for me to take a trade there, or rather there, it wasn't it. That was the first entry there. It's coming down here. It was pretty obvious it was going to attempt that level. So it just makes sense to go from there, really. So still business as usual, the same strategy. I'm looking for stretched conditions to get into mean reversion entries. I'd just rather use my brain at the moment than use a blunt instrument, which is the RSI. So nothing wrong with it, but I'm finding exposure a little bit more tricky to control with a faster RSI. So, which is one of the downsides. I prefer to be in more aggressive. The only reason is because I prefer to be in more aggressive, lot sizing wise myself, rather than conservative. If you're getting in with very small lot sizing, exposure is a lot less relevant. Still relevant, but I'm getting in with fairly decent lots at the moment because I've got some ground to make up this month, this year. Right, let's have a quick look at where we're off to. So 5 minute range on both indices is in. So there's your 5 minute opening range on the FTSE. So I'll be taking a range break of that. DAX 5 minute ORB is there. So at the moment we're inside bar, but we are broken long on the pre-market range. So I am long. So looking for a push up into yesterday's high with the initial market move, and obviously we'll see where the FTSE goes. But so far, he ain't going anywhere. Very light liquidity again today. A lot of it all came in pre-market, didn't it? We saw that massive move pre-market. The DAX had a bit of a wobble pre-market as well. But it's very quiet. I get the feeling it might be a bit of a slow session because we're waiting for that 10 o'clock news. So we'll see where we go. Morning, Blue Trader. Sunny day to end the week and month of August. Yes. Sunny day here as well. Apparently the weather's getting worse on Sunday, which means my kids will want to do a mountain bike ride on Saturday after I've done a 32-mile spin class in the morning, which is always fun. So I end up, when I go on a bike ride on a Saturday, doing somewhere in the region of 50 to 60 miles. Always good. Right. So let's have a look through the FX pairs. So yen's, the other reason I'm looking at taking manual trades as well was because I do want to start getting re-exposed on the Swiss and the yen. But I only want to take one trade, and I don't know what I want to take it on until I see it. So with all the Swissy and the yen pairs, that pound Swiss trade I had on from here. All these lines on the chart. It's all old lines drawn. So yeah, this trade that I took from here was a lovely short, nice, easy, quick short play on the Swiss. But obviously I'm not trading the Swiss with automation. But the reason for it was we've got a double monthly level, which we were looking to get into as we got extended. So that everything lined up. This is the sort of thing I'm talking about. I want everything lined up rather than just going, oh, that's hit the extension. Obviously it worked fine there. It didn't work fine there. Why didn't it work fine there? There's absolutely no reason for a reversal at that level. There's a propulsion gap above and a high there, but that is no reason to short. There's no level where you're going to find volume of order. If it does come down, it comes down purely because the weight of orders is stronger in one direction. But here, we know there were a batch of sellers. Yeah, so we got a bit of a reaction. Here, this area here, we knew we had loads of sellers because that's where that buy ended. And if we're going to continue the short move, we're going to put a lower high in. So that is a great reason to short. That is less of a good reason to short. So I just want to start being a little bit more clever, if you like, on my entries. Also, when you get in to first entry, as I teach in the bootcamp, when I was doing it manually, obviously the bootcamp was before I built the EAs. In the bootcamp, I say first entry, you get in, you plan for where it's going to go and where you're going to get out, and you build your backup plan. So your backup plan is that's an area of interest where we may well find, I'll put my second short there. If that fails, there's an area of interest there where I'll put my third short. And if that fails, there's an area of interest there where I'll put my fourth short. By the time it's got all the way up to there without a pullback, it's massively extended. A la that. And what we're getting? A profit take move. So by taking your first entry at a more logical level rather than just a blind instrument reading, you can plan out what could happen. If I'm getting an RSI extension at an all-time high, you can't plan for where that's going to go. So it's a little bit more risky to take if it hasn't done a massive stretch to get to that all-time high. So those sorts of scenarios will be better not taking blind RSI readings on. So the EA is still run. The position trader EA is all set up on the VPS. The only thing I've changed is that is set to false on the VPS. So it literally just won't take automated entries for me, but it will manage the positions as I've asked it to. So it's just not going to take the first entry automatically for me. I'll be pressing the buttons. That's the only difference. Other than that, position trading is normal. Found the problem with the basket yesterday. In the reversal EA, I have to disable the TP settings. Yeah, if you had TP set on, it will obviously hit the TPs because it places a TP order. From your point of view, pick one thing you would say to your past self about how to be profitable in the financial markets. Is this an interview? Well, Blue Trader, if I could go back and talk to myself in the past, I would tell myself to go and get another job because this is really hard. I don't know what I would tell my past self. I don't think there's much you can tell your past self because you need to learn it. The problem with this, stay off YouTube, Franco, yeah. I would tell myself never to discover Forex Factory. However, that's one of the places I found the thing that actually turned my trading around. So that's not strictly true. But I don't know. There's a million things, and it's all covered in the bootcamp, basically. But main things I would warn myself about are system hopping. I think the thing is awareness. Yeah. When this 5 steps to becoming profitable ebook, I keep going on about it, and it's very short and there's hardly anything of it. But it is very prevalent, basically, in the fact that this is the process you go through. If I was aware of that process at the very beginning, I would be able to identify what was happening to me. Yeah. So the system hopping part is the incompetence part. You spend an immense amount of time here hunting for the holy grail because you see all these people making money and you don't understand why it doesn't work for you. And it's because you're incompetent. And there's nothing wrong with that. Of course, you're going to be incompetent at the beginning because you don't know what you're doing. But you spend your entire life trying to find somebody that tells you that you're incompetent. Wake up, the back over the head type thing, which is where you get to this level and you understand a little bit more about how the market works. And if I'd have known this system, this series of processes that you go through to get to this stage, I would have identified them earlier. So you just have to tell yourself you're losing because you're system hopping, and be logical. Yeah. If you try a strategy for a month and it doesn't work, what are you doing? Wasting a month of your life. If you do that 10 times, you're wasting a year of your life, basically. And you have to go through that process to understand that there is no system or strategy that will ever work for you. You have to press the button and deal with the trade afterwards. Yeah. I don't know. It's very difficult to pick one thing because there isn't one thing. There's a multitude of things that you have to learn. And the only way you learn, blowing accounts, go back and say, well, make sure you don't over leverage. You're going to over leverage because your brain will want to get the money back. It's part of you as a human being. There's a million things. But I don't know. It's an impossible question to answer, really. There's too much. We're inside bar on the FTSE still. Testing session highs on the DAX. If we get through that, I think we'll probably get a run. Lots of gaps today. So there's no volume in the market today. You can tell we're closing candles. We're gapping every time we close and open, which means that there's no volume at each level, which means they're having to jump to new levels to find orders. So there's no volume today. So if there's more bulls in the market than bears, we're not even going to have a battle. We're just going to go. So might be a nice break today, but it won't be quick. I wouldn't imagine. Haven't been in the live room for a bit. What's the RSI2 forward test set up to? Not good at all. We covered it yesterday. Yeah, not good. RSI2's died, basically. I covered it yesterday. If you want to go and have a look at yesterday's live room, but the basic gist of it is the conditions we've just experienced in the last month we haven't had before. So that's the wrong account. It's that one. So yeah, I mean, basically, I've set this up in a slightly different way to the back tests, but because it was going into big drawdown. The problem with the strategy is it hasn't experienced the RSI levels that we've got at the moment. So if you look at something like the pound US dollar and switch over to RSI2, and scroll out, these squeezes that we've had, where the normal RSI2, when you get in, your exit, wherever it may be, is usually when you get an extension back down to the downside. Look at this whole period here for weeks. There was no bear strength at all. It was parabolic. If you go and look at this actually on the 10 RSI as well. Let's do it the old-fashioned way. Wrong one. We've had periods of extension which are just off the charts. Pound US dollar is not the right example. Pound CAD's probably no. What was the one? What have we just squeezed on? Pound New Zealand. So if you go back and look through history and through the testing period, more importantly, that I did it over, which was 8 years, we hadn't experienced moves like this in confluence in that 8-year test period. Yeah, which is why it's so important to test over a long period of time. Most people contact me and go, hey, I've tested this over the last couple of months. Wow, it's amazing. Always, right, okay, that's brilliant. Now test it over 2 years, yeah, and then go back 4 years and test it over another 2-year period, and then come back and tell me if it's amazing. Because that is not long enough to test. Why I tested post-COVID and pre-COVID, because the market conditions are completely different. RSIs were different, ADRs were different, everything was different over that period. We had multiple trading conditions. The trading conditions we've had since we started the interest rate drops hasn't been experienced and wasn't part of the test. So it's gone through a period now where it just got crucified. It will recover, but it's taken a massive drawdown. So yeah, I wouldn't write the strategy off, but I think it needs work still. The way that the guy that I've been dealing with that has been trading it for a long time, again, he's a stock trader, an index trader, and now into forex as well. But the way that he's trading it is using end of day close rather than using any other strategy. So it's an end of day close strategy. But even he has been hurt during this run up period that we've had in the last few weeks. So just one of those things. Nothing you can really do about it. It's just, this is the problem. And what people tend to do now is, as I was saying earlier with system hopping, you just immediately go, nah, that's crap. Let's move on to something else. Even though we've got 8 years worth of backtesting with thousands and thousands of robustness tests included across every single instrument, all coming out with an edge, the edge doesn't work in a certain condition. And if you've never had that condition and you can't test for that condition, you can't predict the future. Yeah, everyone was sitting there for years and years going, oh, this is easy, this is easy, this is easy. COVID hit, they all blew their accounts. I sat through the Swiss franc peg removal. Yeah, you learn these lessons. Oh, that reminds me. I didn't post it in Telegram. Well, I won't be able to show you now, but I was on Wednesday, I was up in London at Buckingham Palace. I had to see the King. He had a couple of bits of trading information he needed. But yeah, I went up to Buckingham Palace and walked around the park there, and there was a black swan on the river or the lake. A black swan. There you go. Good education point for my kids. I said, that is what makes you bankrupt. Anyway, the way I've got it to do button trading is to set RSI strat to true on the VPS, but leave the levels at 100 and 0. Well, or you could just set it to false because you're never going to hit 100 and 0. Unless you're using RSI2, then yes, you might do. But other than that, no other RSI is ever going to hit 100 and 0. Just turn it to false. Just literally set it to false. So basically, I do not want you to take entries for me on those two, but I want you to manage everything. That's the way you do it. What did you make or won't make in August for mean reversion? About 8%. I'm up so far this month. I guess I have to ask for an interview for my YouTube channel, yeah. My button trading setup is ADR reversals set to 500. Guys, why are you not using the input as it's designed? If you don't want it to take initial entries for you, set it to false. You don't have to set it to ludicrous levels. Just say don't trade. It's very easy. That's what they're there for. You're overcomplicating something very simple. Do you want me to trade RSI? True or false? False. Okay, I won't do that. How did it do in 2018? I don't know. You'd have to go and test it. I've done the testing, but I don't know. I got off the top of my head. I met someone this summer that said he still pays debts after the peg removal on the Swiss franc. Yeah, quite possibly. It all depends on the broker you were with and whether the broker chased you for the losses. So my broker was Alpari. For those who don't know what we're talking about the Swiss franc peg removal in 2014. Here. So this move here, it was, I mean, that's a daily candle, but that move happened in minutes. And obviously you can see how big the normal candles are on this. Yeah. Everybody went bankrupt, including my broker. So if you were with a broker that didn't go bankrupt and you were long on this, your stop loss did not get triggered. Yeah. If you were with a broker that didn't have financial cover, you owe them whatever it was they closed your position out at. So if the broker had if you had a stop loss there with the broker and the broker couldn't execute your order in the market until there, you are liable for that. Yeah. It's the only one that's ever happened. This is the only black swan event in my trading career, which is 16 years, that has ever happened to me. And it was in 2014, 10 years ago. But a lot of brokers went bust there. And a lot of brokers couldn't chase for the debt because you're covered by the Financial Conduct Authority or whatever regulatory body. All brokers are covered by regulatory bodies in their own countries. And the cost of trying to get these debts back is just not on the cards. Yeah. If you've got 1,000 customers, the cost of you getting a law case to get all this back is just not happening. But there are certain brokers out there, usually the unregulated ones that are in Ooga Booga Island off the coast of Unga Bunga land, yeah, who people still for some reason trade with. Those guys, yeah, you're stuffed. Probably come after you with axes. But anyway, yeah, it doesn't happen very often though, thankfully. Long on the FTSE. Not really keen on being long on the FTSE, but we'll see where it goes. It's just no volume this morning. We got an hour and a half until the news, which is, I think, probably what the market's waiting for today. But we might get a grind. See how it goes. Right. I will carry on. So, going through the Aussies. The moment, Aussie CAD sideways for the last 2 weeks, as you can see, going nowhere. Bias on this one at the moment. The Aussies basically are long. So latest news from the Aussies, obviously, yesterday we had Wednesday we had the CPI coming out at 3.5. So inflation is going up again, meaning that it's less likely they're going to reduce interest rates. They are the only country so far, apart from the US, but it's pretty much a 99.9% given they're dropping in September. They've already said that. They're the only country that hasn't reduced rates yet because their inflation is incredibly sticky. It's stuck up here. So it's a case of basically there's not really any chance of them dropping interest rates in the near future at the moment. New Zealand were in a similar boat, but their inflation's coming down fast. So they have done their first drop, but without telling us. So Aussie, you've got to be having a long stance on it at the moment. Whether or not it will be stronger than the cross is what forex is. So your stance is going to be long. So you're going to find it easier to get out of long positions than you are shorts. But at the moment, there's not really any movement on it. So the market doesn't know which way to take the Aussie because the Aussie doesn't know which way it needs to go. So no signals on it sideways at the moment. It's just kind of sitting around flip-flopping, as you can see. Intraday, quite nice movement. But there's no reason to be bullish or bearish on that one at all. Aussie dollar Swiss, very much the same thing. The Swiss franc and the yen are virtually the same. I'll cover all the yens and the Swissies at the same time. That chart is still not updated. Well, this is right. So this data here is quarterly figures, not annual. Yeah, so this data is pulled direct from the source. Yeah, and that is correct on a quarterly basis. Yeah, the year-on-year figure is different to the quarter-quarter figure. We concentrate on the quarter-quarter. There's monthly, month-on-month, quarter-on-quarter, and year-on-year. The market watches the quarterly figures, which are still the same. I will check the source on it, but I did check the source yesterday, and that is exactly the same. So, so yeah, Swissies are all the same as the yens, like that, basically. So if you look at all the Swiss franc and the yen pairs, they're all doing very much the same thing. So all of these are kind of, at the moment, very, very difficult to trade because we've had the shock of the yen intervention and the fastest drop against the yen again in history. We haven't, this so many firsts come out this year. This has never happened before either. So we've got the same patterns forming on all the Swiss and the yen pairs. The Swiss is a little bit more lively and out of sync with the rest, but all of these pairs at the moment, very, very difficult to pick a directional bias on. So the Swiss, we know, will move on safe haven runs. So again, we've got much more escalation potentially coming in the Middle East now that Israel has decided to attack the West Bank as well as Gaza. So it's escalating there. The US, nobody's happy about it because it's looking more and more like a genocide move. So whether or not we're going to get any more escalation there, which is likely, and where it comes from, more importantly, will decide on whether or not the market goes back into fear and extreme fear mode. And if it does, all Swiss franc and all yen pairs are going to power up, which means from a fundamental bias at the moment, you want to be shorting everything against the Swiss and the yen. So looking for opportunities to go short rather than go long, because there's more possibility of escalation than there isn't, which means safe havens will get rallied. So all the Swiss franc pairs at the moment, as I've got the EA turned off on them for automatic entries, I have had for weeks now since the intervention move happened. I still don't have any real indication of wanting to get into these because, as you can see at the moment, a lot of it is just flip-flopping around and there's not really any reason to get into anything. You can't say this is a beautiful, like yesterday was a beautiful short from that high. But what happens if this is the one that does that? Yeah, there's just no range in it. Yeah, so if you get into a trade on this, it's going to take 2 or 3 days maybe to get an ADR. It's just not worth the risk because we know how volatile and how fast this thing can move. We've got no guarantees that the Japanese won't just whack another order in either. So all the Swiss franc pairs and all the yen pairs, good for stop loss strategies, or like that pound Swiss trade, as I said, if you see it approaching a really strong support resistance level, yeah, good looking short opportunity, nice extension. So you just want really 5-star entries on these pairs. at the moment. So none of them at the moment, as you can see, are really doing anything. We've got RSIs central on pretty much everything. There's no strength of movement anywhere. So US obviously has been very, very weak. So with all these pairs, when you get the Swiss and the yen sitting here stable and not doing a lot, the other cross is the one that's going to move it. So obviously that's come down. The Euro Swiss has come down because we've had a weak euro. Yeah. So it's the currency cross that is making the moves, not the Swiss and the yen. So with all those at the moment, I'm just still waiting for something exciting to happen. If the dash lights up at 150 ADR, yeah, probably a good opportunity. If you get an RSI extension on hourly or 4 hourly that is big, yeah, if we're talking 85s, 90s, yeah, I'm interested. But other than that, Swiss and yen are just kind of stuck at the moment. Aussie, New Zealand. So New Zealand dollar, obviously, very odd at the moment. New Zealand dollar movement is bizarre in the fact that it's just moving erratically for no reason, regardless of what their news is. So last move we had, obviously, was New Zealand interest rates changing without warning. And New Zealand dollar powering up off the back of it a week later. Absolutely makes no sense. So at the minute, we're just kind of flip-flopping around. So there are opportunities to get in. Nice one there. So you'd have had a lovely exit on that Aussie New Zealand long. The thing that worries me about this, second entry would have been down there, exit there, or here. The thing that worries me about this is the New Zealanders reducing their interest rates again, and the Aussies saying it's not going well, we need to put our interest rates up. The bias on this is going to become incredibly strong to the upside. So you can get one of those parabolic squeezes, which the Aussie New Zealand likes to go into, where it just takes off. Yeah. And we've seen multiple instances of this. So it's one of those, you want to kind of get in on this type of holy crap move. Yeah. So you're getting in as late as possible. So again, it's one I'm watching, but I'm not particularly interested in trading much at the moment. It's just a very erratic pair. I've been stung with the Aussie New Zealand twice in the past. It's not fun. So I got stuck here on a long and I had to take a big loss. Perfectly valid trade, but it just didn't, not on the daily, it was on the 4 hourly, but just didn't manage to get any traction in the opposite direction. And that was, again, because that point that I entered on the 4 hour chart, the interest rate deviation differential changed. So the Aussie interest rate rally and New Zealand didn't. And it just, sorry, it's the other way around. It just collapsed. So you just got to be very careful with that one at the moment as well. Aussie US, 3 shorts on it. Another one gone in this morning. That's quite close together. What was that yesterday? Not sure why those are so close together. But yeah, we're stuck, obviously, off the back of this move on the news. So they are buying this level up. We had a reversal alert going yesterday after an attempt to get out of the weekly high, which failed. And so far, we're sitting there doing nothing today. So target for me is a return to origin move, which should be fairly achievable. We need some strength in the US. So at the moment, the Fed are dropping rates in September. We don't know if it's going to be 0.25% or 0.5%. And the market really is 50-50 on it. I think the Fed are 50-50 on it as well. However, we've had all sorts of things coming out of the Fed and they change their mind every other week. So at the moment, we should be seeing weakness in the US moving forward. However, the market has already factored in that weakness. As we know, they were anticipating a September drop and they've got it. So while we had the knee-jerk reaction to the news, which was Powell saying Jackson Hole, we're going to be dropping interest rates, the market hasn't actually continued the rally because it was expecting that. So now we're waiting for them to actually do it. So any positive news on the US is still going to be able to rally it quite strongly anywhere up until third week of September, when the interest rates are going to drop. So we've got 3 weeks ahead of us, basically, where we could easily get strength on the US dollar. So they've piled in shorts on it. They may well take profit before that next leg because they don't know whether it's going to be 1/4 or 0.5%. So I don't have a problem with longs on the US dollar, even though it's had this big bad reaction. We didn't manage to hold the high of the month, unfortunately, although it is flip-flopping around there for the last week. So it's not a very convincing break, is it? So I think there's a good chance of pulling back on this leg before that continues. And obviously the bias on this is long as well. So I'm kind of the wrong side on it at the minute. CAD Swiss, CAD Yen, Swiss Yen already covered. They're all over the place. Euro odd. So we had this weird 300 ADR in 2-hour move, which screwed everything, indicator-wise anyway. And we are now back down in the doldrums. So bias on this one is a short against a long. So it's short bias overall, long term. We've got a lovely area of resistance, support coming up down here. So this low, we broke it, stayed down there, pushed up and off. So to 150 ADR today, which is going to be my third entry long on it. I suspect we'll probably find support. So we'll see which way the news goes today with the euro. If it's bullish news, obviously, we'll be looking to pull back up and retest that range and then potentially continue down, which is where it should be going. And if it continues down, we'll have a nice big stretch and I'll get out when it bounces off the support. Euro CAD at the moment is nice bounce off of support as well. So this area here where we hit and got accumulated for a day, propulsion moved through it, and then they added again, added again, added again, added again. Then we had that weird move. So this is an area where we know we've got a load of buyers. If this breaks though, we're coming all the way back down into this move down here. By that time, you'll be incredibly stretched. So this one is a good looking long at the moment. But as you can see, we've had a couple of extensions to the downside on it. Where we've just kind of ground, basically. And obviously the news didn't help there. So it's very much due a pullback up into there, I think. But we'll have to wait and see. We've got news on the euro and we've got news on the US and the CAD today. So euro Swiss covered. Euro pound, I've got longs on at the moment. Got 4 longs on this. This thing's grinding horribly. Just a horrible grind move at the moment. We're back now in this sort of accumulation. So we had that propulsion move to the downside, which the market got stuck at. We finally broke that level. We have now re-entered this accumulation. So we would expect in this accumulation to reaccumulate, which means that we should get a push back up. Bias on this is very, very hard at the moment. Euro is a short. Pound is also a short. Euro is likely to go first and is very likely to go in September with another rate drop. If that happens, that will encourage the pound also to drop. Hopefully Bailey to come out and say something about it. So the euro rates go down a week before the US rates. So overall on this one, the bias is, as usual, nothing. So you should see normal price action, which means it doesn't matter which way you trade this. This A-shaped recovery here is a little bit skewed because this includes that 300 ADR move that we had on that Monday out of the blue. So if you take out that 300 ADR move, that was really the leg it was putting in, which is part of the range. So it's just normal price action. So we're just waiting for them to take profit on this move. Obviously now they're back at the origin of the move. Highly likely this is where they'll start the profit take from. But how far up will go, difficult to call. So I'm looking to get about 150, 200 ADR move out of it to get back to break even, which is that propulsion gap in the 4 hour. So there's plenty of upside targets on this. It's just a case of we need some news really to kickstart it. Hopefully the euro. DAX is probably rallying, I guess, is it? Yeah. Okay, so got 2 hour on the DAX. not even moving, is it? Look. I'm going to take one off at 2R just because we've got no volume. And I'm worried about them just doing that. Just bring it back to where we were before the news. So we've had an hour of rally. Might get another hour of dump, but I'm just going to move TP to yesterday's high. So just locked in 200 on that. That will cover the majority of the hedge on the FTSE, should it hedge. But second half's locked in on it anyway. The only reason I checked that was because I saw the euro collapsing against the pound, which means obviously the DAX will be going up. So coming down into yesterday's low test right now. So we are just about to test yesterday's low. So that's yesterday's low, that line there. And obviously we kind of double bottomed off of it. So we know there's buyers here. They're holding this level at the moment. So, oh, look at that. God, look how much little volume there is today. You see that whacking great move that just went in there. It's jumping about all over the place. They're waiting for something today. We're waiting for something to happen. So we're just testing that low right now. So hopefully we'll find buyers kicking in here, pushing back up. But yeah, should be able to trade this in either direction. We've got this support here, this support here. This is a monthly level. That's a monthly level. So it's a double monthly bottom. Yeah, there's going to be limit orders here. If we do push down today into ADR, you're running straight into a load of limit orders. So hopefully we'll get a kick off of that and it will just pull back on this leg. But this leg's huge. Much bigger. But you'd expect it after a stupid move like that. Euro New Zealand, again, longs on this one, out of the propulsion at the moment. So, you know, again, this entry taken here, there's an accumulation there. So I've got no problem with that initial entry that was taken on that 4 hour, hourly, that was a 4 hour RSI extension as well. Just happened to turn tail and run and put another leg in. But obviously propulsion is the best place to take the trade from. As you can see, this accumulation we are now running into. So looking for a pullback up into last week's low on that one, long. So that was a 4 hour RSI extension initially here. But yeah, we just literally sold, done nothing but sell all week. Nothing much you can do with it. And Euro US dollar, so that was coming down. So I got out of my Euro US dollar trades on Wednesday here on the propulsion gap fill. And then obviously we had the news yesterday, which drove it further down. So we're looking for the news today to hopefully be bullish and correct that a little bit. So there is a chance that will happen, obviously, because the French CPI is an uptick. German is a downtick, only just. Spanish is a downtick, but Spanish is not as important as German and French. So it could well come out as expected, but we'll have to wait and see. Could go either way, that one. But at the moment, obviously, there's no RSI extensions, not big ones, but we are extended on the 4 hour to the downside, but I want it a bit lower ideally. So lovely propulsion gap bounce going on at the moment. So that is the break of that high. That propulsion gap there is the break of that high. So two good areas of support coming up, basically. And we know that accumulation break there was rebought as well. So any of these could act as a springboard on the way down. But obviously, we'll see where the news takes it. Let me just catch up on the chat. I closed the green trades on the day before the important news. Yep. But there's important news every day. Yeah, this is the thing. This is why I'm trying to develop this. I'm going to build it this morning. I've decided this morning I have a focus. I am going to build the EA to do the hedging strategy that I want to build. So at the moment, I haven't got a product or an EA that basically does what I want to do. So I'm going to have to just, I'm going to take the, I don't know, I'm going to take either the Price Action Toolkit or the Position Trader EA, strip a load of crap out of it, and build the one I want to build, because we've got news every day. So there is an opportunity every day to benefit from that news move with a hedge position. So I'm going to develop that strategy further. That's the one I just showed you earlier, this account. I've been doing it wrong. So the strategy was introduced to me quite a while ago, and somebody else sent it to me recently, a kind of variation on it. But all it is basically a news trading strategy using hedging. And all you're doing is you're placing a trade in both directions ahead of the hedge, ahead of the news. And the idea is, if you're, in this case, trading the US dollar, because there's news on the US dollar, you use two other crosses which are closely correlated to trade against it. And the idea will be that the correlation will give an edge, either positive or negative, when the news hits. If it's a positive one, you close the whole lot out, walk away and wait for the next day's news. If it's a negative one, you wait for one of the positions to be in profit, you close that out, you use it to do half the hedge, and then you re-hedge. But you don't re-hedge with the same amount that you hedged with initially, which is what I was doing. You re-hedge with the difference, and that you need that calculation done for you as to what lot size you should be using to level the hedge up. So my EAs just don't have the facility to do that, because they only work on money or lot size or percentage risk. We need to work on what's the differential between the lots based on risk on two different currencies, which is a much more complicated calculation. So I'm doing that this morning, and I'm going to do it in MT5 so I can test it multi-currency in the tester as well to make sure it works. Anyway, there you go, DAX pulling back down from that high. So that was a perfect exit. See if it comes down and takes me out on the second half. I use the ADR 500 setup. What on earth is the ADR 500 setup? Because I need the EA to still open additional trades. Yeah, it will do. Do DD control. Yeah, so you don't have to. I don't think you need to go and reread the manual, Mumo. If these are set to false, these are auto strategy entry. So this is the initial entry. If you want, the EA is saying, do you want me to take an ADR reversal or an RSI mean reversion strategy? Yes or no? Yeah. Regardless of whether that's yes or no, if there's a trade on, the EA will manage it. Unless you have button trading only, disables all other functionality below, set to true. I think you've misunderstood. Yeah. If you have that set to false, that set to false, and that set to false, and on my terminal, I press one of these buttons, all of this still works. Maybe I need to make that clearer. What time frame do you find the propulsion levels most reliable? 1 hour. They work on all time frames. Yeah. But you see how many you've got missed above and below on the 15 on the hourly chart here. If you drop down to the 15-minute chart, it's not actually that much different, is it, on this particular instrument? But the 15-minute, the thing with the 15-minute is it draws a hell of a lot more propulsion gaps. Yeah. So you get an absolute mess of propulsion moves in a fast market. On the hourly, it's so much clearer. Don't forget, a good propulsion gap, there's a good propulsion gap and a bad propulsion gap. A good propulsion gap is a propulsion move that breaks a level. Yeah. So this propulsion gap here was part of that leg which broke this high. Yeah. This propulsion gap here is just part of a move going down. It's not breaking any levels. It's just a strong buy or a strong sell order. Yeah. So what we're looking for is the propulsion gaps, ideally like this one, which broke that low. So we hit the low, we bounced off of it, went above it, we hit it, we slammed through it. So that propulsion gap and that propulsion gap were part of that leg that broke that low. That is a good propulsion gap. That is not so good. It's just part of a sell, part of an A-shaped recovery. It's part of a move from that propulsion gap, which broke that accumulation. So on the 15-minute time frame, you're going to get a hell of a lot more useless propulsion gaps, like that one. Yeah, that, you know, it's just, if you look at that on an hourly chart, so this low here tested 4 times and then it slammed through it. You've got a propulsion gap move into it, which didn't break it. You've got a move through it and a push up and then a propulsion gap down. But that was what broke it, not that and not that. Yeah. But on that day, 22nd of August, if you switch to an hourly chart, yeah, these are the lows we were looking at. This one doesn't quite work, does it? Because it did wick up all the way up to there. But that whole 2-hour move there was the propulsion move that broke it. Normally, you would find that is a propulsion gap. Not in this case. So absolutely the wrong example to pick. 4-hour, they tend, it's still very reliable, as you can see. Yeah, there's one up there that it missed, but every single other propulsion gap is filled or mitigated, as you call it. Yeah. But on the 4-hour, you know, you're looking at, all right, we're going to target there, are we? Yeah, we are. Probably 2 months. Yeah, don't forget, each of these is a week. So to mitigate that propulsion gap, from when it was first formed, it took 1.5, 2 weeks to mitigate that. Then obviously you sold out of it. And then it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks to mitigate it. 3 months. We're not interested in getting into a trade and targeting something for 3 months. Well, you can be, it's swing trading, but hourly, you're going to get there quicker. And you're going to have more movement. So I just prefer the hourly. I just find it more comfortable, but that may be me. I don't know. But, you know, it's just, you're going to get orphans as well. All time frames, you're going to get orphans. And these will be news events and fundamental shifts. This one here, for example, is because there was absolutely no logical reason for this move of 300 ADR. Therefore, we undid it. And I said, I said, if you go back to that stream, that's not staying there because there's just no reason for it. Someone's lent on the buy button by accident. You know, this is not, there's this a glitch. Or it's just some weird coincidence where all market participants did the same thing at the same time with no volume, obviously, because it's summer, it's slippage. So that one, there's no reason for the market to come back there because they're just undoing that move. Yeah. But that one is part of a news event. Yeah. Which reversed the market. So they will likely come back and test that. Yeah. In the same way as that one there is a break of that high. Yeah. And it returns to these levels, but obviously it takes varying amount of times. So the lower the time frame you go, the more of them you get, the more confusion there is. So like with everything, the higher the time frame you go, the smoother everything becomes and the easier it is to see everything, which is why I use hourly and 4-hourly for analysis. You'll never see me analyzing anything on a lower time frame because everything is too choppy. There's too much crap in here. But that's me. That's my choice. You know, people at ICT who renamed the wide range bar from the propulsion gap into the fair value gap, which is now what the market has decided I'm going to call it. He trades 1 minute and 5 minute charts. Yeah, look how unreliable they are. Yeah, which is probably why nobody does it anymore. I'm looking forward to some volume in September. I hope so. Yeah. Hopefully in the right direction as well. And orderly volume rather than what we've had, which is weird and wonderful movement. Do you anticipate spending more time trading now you've decided to go manual? No. No. The trading, and again, that's something we were talking about earlier. If I could go back and tell myself something, I would tell myself not to analyze charts. Yeah. Because what you're doing every time you're looking at a chart is your brain is being overloaded with information. So should I long it? Should I short it? This is telling me to do this. This is telling me to go long. That is telling me to go long, but that is telling me to go short. That is telling me to go short. We're in an accumulation, so I shouldn't really go long or short because I don't know which way it's going to go. Neither does the market. Oh, this is what happens. Analysis paralysis. If you just wait for this thing to go ding, that's all you need to react to. Yeah, something's moved. Excellent. Let's have a look. That's why I built these dashboards. This is why they're there. So I don't spend time staring at charts. There's no point in staring at a chart because it is equivalent to paint dry. The amount of years I spent down here on M5 trying to figure out how to put some kind of logical order into this chaos. I probably 3-4 years of my life. And then when I met my mentor that started trading a 4-hour strategy, it all became clear that it doesn't matter which time frame you're looking at. There is no advantage on a lower time frame. Whenever any candlestick paints on any time frame, it is telling you what has just happened in the last hour, 4 hours, 5 minutes, 1 day, 1 month, 1 week, 1 second, 1 tick, 1 minute, whatever time frame you're looking at. It has no bearing at all on the future. So trying to analyze patterns down here, you are analyzing patterns on algorithmic movement of billions of dollars worth of orders going into the market at random and just being executed on behalf of commercial orders. No sense, no logic. Sometimes it will come down, it will take out the low of the day and it will bounce. Sometimes it will come down, it will take out the low of the day and it will do that. Sometimes it will come down, it will take out the low of the day and it will do that. Sometimes it will come down and it won't quite get to the low of the day and you'll miss a trade and you'll get scared and fear of missing out will kick in and you'll get in up there and then it will come down and take out the low of the day. Any of those can happen, but it's not happening for any other reason than are the banks executing more orders, bullish or bearish, at the point in time that you get to the low of the day. Yes, there's always limit orders sitting there because there's always orders waiting to be executed because the banks don't ever stop executing. It's just algorithmic. You suddenly move up into a higher time frame and it becomes very clear what's going on. Yeah, the banks and institutions are buying this level. On a 5-minute chart, that would have driven you mental for 3 weeks. You would never have picked the right point because it's different every day. So moving up time frame, it just smooths everything out, which is where we get, I get these moving averages from. The mentor that taught my mentor told him to buy it when it goes green and sell it when it goes red. Look how much money he made. Yeah, but he sat there doing nothing for 7 weeks. 7 weeks, 2 months. He went buy, went on holiday, traveled around Australia for 6 weeks, came home and went still long. Nothing told him to do anything different because there is no reason to do anything different. If the trade, when you press the button, whether you flipped a coin, used an RSI, used an ADR, used a propulsion gap, used yesterday's low, high, whatever, if the trade works out, stay in it. It's very, very simple. But going down here, and the advantage of going down here is more signals, more opportunity to make money, tighter stops. But it's still random. So yes, your stop is tighter, which means the odds of you getting taken out are way higher. Yes, I can make more money if I get it right, but my strike rate is going to drop dramatically down here. There's no indicator that's going to help you be successful. And the thing that's my advantage is I could teach myself a lot faster all of this because I was a programmer. So I built EAs to model all the strategies that I found and find out where they go wrong. They all went wrong because there isn't a strategy that works in all market conditions. And the market conditions change, which is why I moved over to ADR instead of pips, because the pip count changes hugely all the time. You stick an ADR on your chart, it's one of the most important, ATR is one of the most important indicators on the planet because it proves to you that sometimes there's no range So instead of targeting and using a stop loss of 10 pips, you need to be using a stop loss of 3 pips. Other times, you need to be using a stop loss of 100 pips. But if you use the same strategy here and here, never going to work, which is why you system hop. You find a strategy, you test it, you trade it for a month, and you go, this is the best thing since sliced bread. ADR drops the next month to half of what it was, and you lose all the money. And then you go, well, that doesn't work. I'll move on to something new. There's 3 months of your life gone. Nothing wrong with the strategy. You just don't understand how the market moves, which is why it's more important to learn this than it is to learn a strategy, because the strategy is just a series of events to press a button. What happens after you press the button is how you make your money, not why you press the button. It's irrelevant. It's a 50-50 shot every time. Yes, you can build an edge by going, well, when it gets down to here, more often than not, it goes up. But it's the when it doesn't go up, that's the important part. How you deal with that. Yes, you can take a loss, and it depends what the market's done before you take the loss as to how much that loss is, or you can just wait for the market to go back to where it was, and you need some kind of fundamental bias to do that, or some kind of directional bias ideally. But going down to a lower time frame or watching the charts more often isn't going to help you. If you have a system or a strategy for entering the market that you like, you just need something to tell you when that occurs. Rather than watching it for 8 hours a day, wait for something to go bong and then react to it. Push notifications. Yeah, go and walk the dog. Go to the cafe, sit there, have a cup of coffee. And if a push notification goes off, you go, bye. Or you set an EA up to automatically get you in. And then you come home 2 or 3 hours later and go, okay, I got into that. What's it looking like? Don't like the look of it. I'll close it. Or, yeah, that looks fine. I'll let that run. But don't spend your life sitting here watching these. If you want to get chart time, and chart time is incredibly important. If you want to get chart time, go into the strategy tester and do this. This is the best thing you can possibly do. Watch this go up and down, because this will give you repetitive strain injury in your eyeballs as to how the market moves. When it goes down, it goes up. If it goes down for a long period of time, it will go back up again. Yeah. You know this, I know this, because I've been watching this for 16 years do the same thing over and over again. I just don't know when. And the higher the time frame, the more chance you've got of it working out. Yeah. I'm drawing this on the chart, predicting what's going to happen on the chart I've never ever seen on a time frame I don't even know what time frame is. It's 15 minutes. I don't trade it. But I can tell you what's going to happen because I've seen it 1,000 times. Except you will get it wrong multiple times. Yeah. So what do I do in that instance? Wait for the next thing to come along, which is another upward movement. So after an upward movement comes usually a downward movement. You just keep rinsing and repeating. Out. Yeah. And I didn't even pick. There's no signal. There's no system. There's no strategy. It's me going, I'll short it. Yeah. It's not the signal. It's not the time frame. It's the after that makes you the money. I don't even know what this is doing. But this is just an EA I've been using to test a strategy, which looks very promising. Something to do with that, but I'll explain that another time. Anyway, what time frame do you find the propulsion? I've already answered that one. I have not considered that setting all 3 to false. We'll switch the A to semi-automated. Yeah, that's how it works. But you'll need to look and place your first entry where, as previously, the EA would have done it. Yeah. Yeah. But, you know, this is the thing. Like I say, I have strategies that I trade because I need strategies to trade. You have to have a reason to press a button. What that reason is much less important than what you do after. Yeah. So at the moment, I am finding RSI less reliable this year than it has been forever. And it's because the market conditions are different. Yeah, I've just taken that ADR off, but you look at the ADR now here for the last month. Yeah, at this level, I'll draw it on the chart. Yeah, so that's the high of the last month, and that is the low of the last month. Yeah, if we scroll out and look at where we are and where we've been embedded down here, we don't often get here. This was post-COVID. Yeah. So the market went, holy crap, what did we just get hit by? What do we do next? Prior to that, you had a period in 2019. But, you know, a lot of the time, the market spends above that level. But more often than not, our volume for the last 2 years since the interest rate rally freeze has been reduced, which means what? You don't get a lot of relative strength movement as much. You get more squeezy movement because the market is shocked into moving on news rather than on normal profit taking, order placing type system. So RSI has become a little bit less reliable over the last year. Not to say it hasn't worked. It does work, obviously. There's people absolutely killing it in Telegram. Keep looking at that monitor, which isn't there anymore. They're now over there. But it's, you know, it's just a case of, if this hits last week's low, yeah, I've got an RSI confirmation, I've got last week's low, and I've got an accumulation coming up there. So I can easily plan that trade with 3 positions, maximum 4 to 5 positions. Don't have a problem with that. But the bias is wrong. Yeah, that's the bias. So I would much rather get in up there than I would down there. But it's not to say that it doesn't work. It still works sometimes. It's just at the moment we're getting a little bit more squeezy. So I just want to see, I think what I want to see is more confirmation that if I get in wrong, I've got, you know, let's say, for example, I got in long here. Yeah, on that one. I would be going, I like the look of this because of that. And I also love the look of that double top because the market is going to retest that level and bounce at it like that. I mean, if I obviously knew it was there, but that was what would be going through my thought process at that point, because we know support and resistance works very, very well. So it gives me more confidence to get in there because of that signal. But I'd rather me take the signal rather than the EA. That's all. Still going to be taking positions, still going to be taking the same sorts of trades. But it also allows you to take any other trades you want to as well. If we get, like, let's say, for example, we come in the afternoon and I come on stream and we've got a 175 ADR, which is still pushing. Damn right, I'm shorting that. But I'll short it with a sell stop order, and I'll make sure it's on M15 so that I'm trailing an M15 sell stop order on the VPS. Yeah, so that sort of thing. Don't know if it'll work or not, but don't know if any trade will work or not, will you? If I take manual entries but use your dashboards often, I will ignore a signal. Yeah, but there's also no problem ignoring a signal, Wayne, is there? This is what the dashboards are for. They're for signaling you to look at the chart. So if you get a signal, we haven't had any signals pop up all morning, typical. But if we get a signal popping up, just gone past an hour and nothing. If we get a signal pop up on something and you look at it and go, that's going to be better down here. Fine, wait. Just wait for it to get down there. So you get another signal down there. Yeah, so I wouldn't worry about it, really. One little hint, if you want to get signals back, just highlight the dashboard and change timeframes, and then just whiz through them all again. Something I used to do is if I'd go off for a few hours, I'd come back, I wouldn't know which of these is the most recent signals. So I just flick time frame and it tells you like which are the most recent signals. 9, 12, and 27. So there's that one, and that one. Yeah, so I just look at Euro New Zealand twice and Pound New Zealand. Do you sell your dashboards on MQL5? Yeah, it's all on the website, where everything's on the website. Just go to the website, have a look around. I do everything on MQL5 because it's easy. Right, pounds. Waffling today, aren't we? Right, so pound basically at the moment bearish, possibly. Bailey's still not confirmed what we're doing after the first interest rate drop. Australian dollar bullish. So you know, like we were saying on this one, I'd much rather be doing that than that. But at the moment, market doesn't really know which way to go, does it? So nice extension to the downside. There is a good looking long opportunity on that one right now. We've got a lovely double top, which is holding very, very nicely. You got a little bit of a wick off spring there if you're a wick off trader, but we also got a wick off spring short up there. So basically there's just mixed signals at the moment. Doesn't know where it's going. It's going to go one way or the other. But right now, pushing up into there. Sorry, let me just quickly check. So still in the DAX, still in the FTSE. Absolute slug today, the whole lot. Pound CAD, beautiful double top. Went in last week, reversal alert and retest. Beautiful market structure to the downside. Again, bearish, just bought the propulsion gap up. Again, look, this 4 hour, yeah, you get these propulsion gaps, a lot more orphaned propulsion gaps on 4 hour time frames. But to the downside, obviously, there's no signals. There were signals last week to go short. If you went short, you're already out. On the hourly, nothing much happening either. So very, very sideways week this week. But obviously, we just had the reversal alert and retest, and the market structure short. We're just retesting propulsion gap here. So good looking short entry there if we're going to continue market structure short back down into this area here. 5 minute time frame, reversal alert. So that will be a reversal. So if it pushes up above that high, that's where the support rectangle will jump to. And that will be your M pattern reversal. Entry there. So it looks good for shorts at the moment. But again, not an RSI extension, but from a market structure perspective, looks good. If it's going to continue, obviously. Pound Swiss and yen I've covered. Pound New Zealand got long on at the moment. So not really going anywhere, is it, today? I'm just going to stick a little trailer on this, I think, just to lock the profit in. So just trailing under 150. So that low there, basically, if we start to reverse, we've got a propulsion gap just painted there. So I'm basically saying if that gets invalidated, get me out. We're not going anywhere at the moment on this. So we had the big drop down. I think there's a good chance we'll head back up into 150 ADR. My target isn't that high. I'm just looking for this propulsion move here off the back of the news. But it's kind of stuck. So I'm just locking that profit in at the moment. Pound is bearish. So pound US dollar, got shorts on at the moment. 4 shorts on that. Fourth one taken yesterday. Oh, I took some off of this. So I did some drawdown control on this one on Wednesday when I got back. So we pushed back down into that low and then we pushed back up again. So I had an aggressive drawdown control that I took off, closed out 50% of that position and closed that one out in full because it was a bit too close to that one. So yeah, looking for that to push down basically, undo this leg. Again, on the hourly, you've got so many propulsion gaps. If you find yourself overwhelmed with propulsion targets to the downside, just flick up a time frame and go, yeah, that's the one. Just smooth it out. If ever you get too much, like I haven't got a clue, go up a time frame. Everything becomes clearer. Yeah, it's very clear this is bullish. Yeah, so if it's going to remain bullish, that's really what you're looking for, isn't it? Yeah, if it's not, and that reversal alert is going to turn into a head and shoulders pattern, yeah, we should be coming down into there, should be coming down into there. But as we get a 50% retracement on it, we're going to start to find people wanting to buy it again, aren't we? But again, it's just related to this. That news is so important. I'm just going to turn all the lines off because it just makes it all messy. New Zealand dollar pairs. Nobody knows what's going on with New Zealand. We should, in theory, be bearish New Zealand at the moment because the interest rates changed on the New Zealand dollar unexpectedly. However, doesn't seem to be particularly weak at the moment, the New Zealand dollar. Canadian dollar has been weak with the US, but again, I think this is probably all going to start to turn tail. We've got lots of weird stuff going on at the moment with oil as well, with constricted supply, which is going to affect the oil price, which is going to make that go up, which will boost the Canadian dollar. So there's a good chance I think this is probably going to come back down from here. But you've got divergence there, triple divergence, bearish. So I think they're probably going to want to come back down and undo this, but we're going to need some positive CAD news or some positive US to kick it off, and then they'll start to rally it for a bit. So there's all downside targets at the moment, as you can see, loads of blue to the downside. That's your only one upside, and we've already tested it and it's tiny. So we're either going to head up and double top, and if we do that, we'll be very extended, and obviously that'll be a quadruple divergence. So yeah, it's looking good for shorts at the moment. You've had the reverse alert on the hourly, which is retested already. So that's the potential end pattern forming. We have not managed to break yesterday's low. So if we do break yesterday's low today, possibly start that cascade effect to the downside. New Zealand, Swiss and yen recovered. New Zealand, US, shorts on at the moment. We've got the reversal alert in yesterday. I've got an aggressive drawdown control position on. As you can see, there's a stop loss there on that one. So I've got an aggressive drawdown control position on just to bring that average up. We've got news coming in today. So I'm just looking to get out of the aggressive drawdown control position with a TP in the middle of that propulsion gap. That will allow me to close out some of this. I'm going to close out one of those as well because I've got two a bit too close together. So yeah, just hoping that we get some positive US news today. And US CAD, very much the same story. We've gone nowhere this week. Got longs on. I've got an aggressive drawdown control position on here. Average is within ADR. I just want a US push. One ADR. So propulsion gap being undone. So yeah, just looking for literally a little bit of movement on the US. Not a lot, a little bit. Yeah, we know it's going to be bearish moving forward, but quite how bearish after selling off that far ahead of Powell's speech telling us it's going bearish. I'm not sure really it shouldn't be back up here by the time we get to the 18th of September, which is when the interest rate change is going to happen. So we have got this propulsion move as well, which they've bought very nicely. So if it does go down one more, goes down one more, but we were literally coming down into propulsion, accumulation, and a hell of a lot of upside targets. So yeah, just don't know how long it's going to take. Bit of a mystery. We've been confused to death by Powell and the Fed for months, absolutely months, changing their decision on interest rates, leading us one way, leading us the other, leading us one way, leading us the other. We've now got confirmation that they're dropping rates in September, not what they're going to drop it by, but that they are dropping it. So hopefully we'll have more clarity moving forward from September in towards the end of the year. But we will see. Be nice for the market to have a direction and have a bias, because at the moment, you know, the last year it's had nothing, has it? It's been a very, very, very tough year this year. A lot of weird movement, a lot of confusion, conflicts kicking off everywhere. You know, it's just, the world at the moment is a very funny place, and unfortunately the financial markets tend to bear the brunt of it. we're stalled out in the DAX. I'm just going to move my stop up. I'm going to go right underneath this candle that we're on at the moment, just to lock in a bit more profit on it, because I get the feeling I might get hedged on this today. So I just want this to cover the hedge, because this is going absolutely nowhere at all. So when the Euro news comes out in 40 minutes, both of these will probably take off. Obviously, I kind of in a bit stuck. I want Euro to be bullish so I can get out of my FX positions, but I also want Euro to be bearish so that that rallies and hits target. But I've got way more exposure on the Euro long, so I'm going to have to say I want it to come down, I'm afraid. Which means I'm going to get hedged on that, but we'll see. Thanks for the discount on MQL5. Too bad it can't be extended into next weekend. Why? Yeah, that ends this Sunday. I could extend it another week, maybe. That means a hell of a lot of hassle to set up these sales on MQL5. I don't do them very often because it takes me an hour and a half. The problem with MQL5, this bit here on the website, takes me 2 minutes. Yeah. When you actually go and look at the products on the marketplace takes me hours, literally hours to set up a sale, because they have no mechanism for offering a sale. You have to go in and you have to put the text in every product. You have to adjust the price in every product. You have to press the price adjustment button twice and the description button once. So it's 3 button presses, a copy, a paste, and an adjustment for every product. I think I've got 25 products, something like that. But yeah, there's 30% off everything at the moment. I just felt like doing a sale. So fill your boots. We shouldn't really have any parabolic moves since pretty much everyone is dropping interest rates. Yeah. It should be very similar to the interest rate rally 2021 into 2022. So that's daily. We did have some parabolic moves during that period. Most of the majors were okay, but we did get parabolic moves because the danger is with differentials, if it's going to be down to inflation. So if inflation gets stuck on one currency, they won't drop rates. In the past, everybody has always followed the US. It's always the US has done this, we do it later. The US has done that, we do it later. Yeah. So all countries have always followed the US. Now we have decoupled ourselves because it's more important that we manage our own inflationary pressures rather than relying on the US. So Euro went way before, Swiss went way before the US, the pound's gone before the US, the Canadian never does anything without the US, and it went before the US. All, again, things that have just never happened before. So now that the US is going pretty much last apart from the Aussies, we should have a situation where we're going to be out of sync, which means we'll have decent movement, but we will be 1 month on, 1 month off, or 0.5%, then 0.25%. So there'll be a lot of movement going on. But as long as one doesn't get stuck, if one gets stuck, so for example, if the pound inflation pops by 0.5% when we're due to drop interest rates, we won't drop interest rates. And if the next month inflation stays stuck, we won't drop interest rates. If the pound CPI, US CPI continues to come down, they will drop interest rates, which means you'll get 2 or 3 months where they'll be out of sync. So you could still get movement like that. But most of the time, because the interest rates are released every month and CPI is released every month, you get that he's done well, 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 he's done well. Yeah. So by the time one of the news events has petered out, the next news event typically does that. It's when you get 2 news events coming out that are in the same direction, i.e. we've had bad news for the pound and good news from the US within 2 weeks, you get a 4-week rally. Yeah. What a parabolic move is, you then get the next news event being like that, and the next news event being like that, and it doesn't stop. Yeah, and there's no reason for it to stop, which is why it's so important to pay attention to fundamentals when you're position trading. If you're using your stop loss, it doesn't matter, because you're just going to get stopped out. You're going to be buying it constantly and hemorrhaging your money constantly. And if you're on the trend, well done, but you'll get out there because you'll be scared every time it does any kind of backward movement, and you won't get back in because you'll think, well, it's too extended, I shouldn't get in, I'm chasing it now. Which is why trend trading doesn't work, because no one can ever hold a trend. Going back to my mentor's mentor, who would go short when it goes red and get out when it goes green, fantastic. Yeah, he made all his money doing that. But then again, he worked in a bank, so he wasn't trading his own money. Different thing, isn't it? So, you know, New Zealand Swiss monthly range just hit. There you go. So there's a prime example of, we're going to wait for alerts and hit the button. New Zealand Swiss just hit its 175% of its monthly range. To the upside. But, you know, this is not a stretch. So I'm looking at this going, yeah, it's 175% of its monthly range, but it's caused by that. Yeah, so it's not really, is it? But it's telling you it's extended. So, you know, this is what alert dashboards are all about. All of my alert dashboards are not saying you need to do this. They're saying, have a look at this. Yeah, as traders, our job is to extract money from the market. For us to extract money from the market has to move. Now, a lot of people are trying to predict where the market's going. Therefore, they go, okay, I'm going to go long and hope it goes long. And if it goes long, well done. But what we're doing is we're waiting for the market to go long, and then we're anticipating the pullback, which is what mean reversion is. So what this is doing is saying, go and have a look at the New Zealand dollar Swiss. It's moved to 120, 175% of its monthly range. So it's making me look at it. If I see something here that is catching my eye for any reason whatsoever, which I'm not in this case, but let's say, for example, we were hitting 175 ADR monthly range rather here, I'd be going, that's an area of interest. That's a monthly level. We know there's going to be some limit orders there, so there's a good chance we might get a little pullback off of it. But I'm not looking for that trade. The dashboard is telling me the thing's moved. Therefore, there's something happening. We make money out of volume and volatility. The market doesn't move, we can't make money. So we're waiting for the market to move. So all the dashboards are telling you is something's moving. Go and have a look at it. Doesn't matter if it's RSI, 4 hour, 1 hour, whether it's ADR, monthly range, weekly range, doesn't matter what the alert is. It gets you to look at the dashboard and say, right, this is moving. Why is it moving? Where's it moving? What can I do with that movement? Anything? No? Okay, I'll wait for the next one to ping at me. And something will ping every hour or every 2 hours or every 4 hours, every day. There's never a day goes by where you don't have pings. Something's moving. There's always something happening. There's always news happening. That's what makes the dashboards ping. Yeah, so it's all about market movement and extracting money out of it. We don't know if something goes up like that when it's coming back down again. But what we do need to do is go, it's moved up. So we know it's coming down. Now, where should I get in? If you fancy it here, do it. If you fancy it a bit later, wait. If you think I'll get into it if it starts going down, hit the sell stop button, stick the VPS onto hourly charts, and it will trail that every hour it goes up. It will keep trailing your order, and then it will get you in. And if it goes 200% of ADR and you've got in with a trailing order at 100% of ADR, you get in at a much better price, and it's extended twice as far as it was when you first got alerted to it. Yeah, we still don't know if it's going to accumulate and carry on the next day, but it's just a way of getting in, isn't it? And this is all the dashboards are doing, is telling you that something's moved. Yeah, there's an opportunity on the Euro CAD, not because we know which direction it's going in, but there's an opportunity because it's moved 125% of what it normally does in a week. Therefore, it's knackered and it's probably going to pull back. Are we at a decent level? Yeah. Propulsion gap. Fill. Looks good. Massive target to the upside. Euro news coming out in less than half an hour. Opportunity. Whether it's right or wrong is irrelevant, isn't it? It's just a reason to pull the trigger, isn't it? That's all you got. About the discounts, no thanks. I'll buy your stuff at full price. You probably haven't got anything left to buy. It's the least I can do for all the free info you give out every day. I don't make enough money out of the indicators. A lot of these people that sell indicators for a living, I don't know how they do it. They obviously spend a lot of money on marketing, I guess. I don't know. Or I sell my stuff too cheap. But I sell my stuff too cheap, so it's accessible to people rather than selling it for $299, which I guess if you're selling something for $300 and you stick $150 into marketing for every person, you're making $150. It's probably worth it. You've still got to sell probably 50 odd products a month to make it worthwhile. Not a business I want to really rely on as an income. But anyway, which is why I decided to do the discount. People are always asking for discounts, and it's quite, I ask for discounts on stuff as well. But the trouble is, when you're doing discounts, like you can see how many products I've got. How many products have I got? 28. But it's not. It's 14, isn't it? Everything's on MT4 and MT5. But it's like if you start selling stuff at $150 and $200, people want more for it. I think a lot of the time, don't they? So I'd rather sell stuff cheap and go, there's a video, watch the video. You're not paying for me. You've bought something that does something. It's all explained. I'm not going to hold your hand. But if you were paying $200 for it, I'd feel very obliged to hold your hand. But I also understand $49 is a lot of money to some people in some countries, which I didn't realize until I started doing this. People coming to me saying, can I trade with a $50 account? No, but I only need to earn $10 a month. Wow, you're loaded then, aren't you, really? You got a lot of savings. Don't put it in here. Go and put it somewhere else. You're going to make more money. That's why I'm a realist, yeah. Valid point there. A discount can help one get more. Yeah. You're doing a charity for us. I know. It is a charity. Now, I'm just passing on stuff, but you've got to also... I have thought about putting everything up there for free. But the amount of time, the one thing that I really, really needed when I was learning how this all works was someone to answer questions and hold my hand. And that was the bit that actually made me not give up, was having someone that has done it, been there and understands it to be able to go, hey, and 90% of the people out there that, 90% of people out there that are like that are charging for that as mentorship, as courses and that sort of stuff. Probably out of those people that are selling courses, 90% of them haven't got a clue what they're doing and are just selling a course. And you can't differentiate between them. So that was my whole theory behind doing what I do, was that helps to pay for my time doing this for free. And people don't have to go and buy anything. Yeah, if you don't want to buy it, don't buy it. You can build your own. Yeah, you can build your own indicators. You can build your own EAs. You can get coders, or you could learn it yourself. There's all sorts of ways you can do it. But there's a lot of support involved in everything, and it's not all about supporting the products. It's about supporting how to use the products and why the products do what they do. The amount of people that I have contacting me going, "Can I have a set file?" No, build your own, but I don't understand how to do it. Then don't do it, because it's not, you're back in the Holy Grail. You're back here on that chart. You're in the bottom. Yeah. Do not spend time here. Yeah. Understand why I'm not giving you a set file. I'm not giving you a set file because I want you to learn how the product works, why the product does what the product does. Because if you understand that, you will know that there isn't a set file that works all of the time. A set file is basically a set of rules that will execute a set of instances in the market. Whether those instances in the market are right or wrong, the set file does not know, because it doesn't see the future. Yeah, there is a better way and a worse way of doing things, and that's all taught in the manuals and explained in the bootcamp, and everything I do is explained in detail. If you don't get it, McDonald's are hiring. And that's the best advice I can give anybody that doesn't get it. I don't understand. How do you do this? Go and find out. If you haven't got the drive to go and find out, you ain't going to make it in this industry because it's bloody hard. Yeah. That's my eureka moment when the guy that was mentoring me said, go and read 2,500 pages on a forum and then come back if you've got any questions. And I was like, you want me to read 2,500 just to answer the question? Yeah, because the answer's in there. And you know what? While you're reading those 2,500 pages on the forum, you're going to learn everything I know. And then you come back with the question at the end, which is, excellent. How can you help me further? Yeah. There is no shortcuts. There is no holy grail. There is no way to go from, I want to learn how to trade, to 1 week being a successful trader. This is where prop is. I don't know how to trade. People get in touch with me and say, have you got an EA for prop? Yes, all of them. What's the set file? Anyone. I don't know what the market's going to do next week, but you want to use the set file that's going to work next week. Well, how do I know that? You don't. But how am I going to earn any money in prop? And then they go away. Then they come back and go, I've just got my funded account. Have you got an EA that's going to help me make money out of my funded account? Well, how did you get the funded account? Someone else passed it for me. So how are you going to make money out of the account? Is he going to trade it for you? Because he was lucky. That's how you pass the account. He took 4 of them and he gave you the one that he passed, because that's how it works with those things. So how are you going to make money with the 100 grand you've suddenly got? So you've gone from being poor with no money to suddenly having 100,000 and being a 100 grand account trader. Not going to happen, is it? It's all smoke and mirrors, the whole thing. And to get to that, you've got to go through this. You just need to minimize the time you spend there. And that's what I put together in the bootcamp, was trying to help people get out of the 5, 6, 7 years or however long it was I spent going around in circles down here before I suddenly realized it doesn't matter. Just do something and wait, because it's random. You can't see the future and all you've got is risk. How you apply risk with 99% of strategies is never going to work. So unless you know what conditions are coming next and you know what strategy to use in those conditions, you can't make it successfully forever. And a human being is not programmed for their P&L to do that. Even if the P&L is going to do that for the next 2 months, that month makes you hop. And when you realize you've hopped 10 times, that's when you become consciously incompetent. You know you're doing it wrong. So then you start looking for why. The why is the bit that is the hardest part to overcome. But you've got to go through the market beating you up for a period of time. Intelligent people spend less time there because they just get it. Yeah. People that aren't quite as driven, I should say, rather than intelligent, because it's not about intelligence, is it really? It's about understanding. You don't have to be super clever to understand that nothing works 100% of the time, because you'll be experiencing it. Those people tend to get through quicker. And then obviously that's the phase where you go, I've cracked it. And then the market comes and kicks you in the backside and goes, no, you haven't. And you go back there. And then you bypass that step next time and you get there. How long that takes? It took me almost a decade. Other people, 3-4 years. Some people never. I was looking on Forex Factory the other day, just before I go, just out of interest. I've been on Forex Factory for over a decade. Haven't actively posted on it for about 6-7 years. But I was looking back through a lot of the old posts I'd made on there, a lot of the old people I used to speak to on there. The amount of deleted accounts from those people is unbelievable. And the amount of people that are still there, still looking for the Holy Grail, is incredible. And some of them have been in my group. And I see the names crop up and I'm like, I recognize that name. And I go into Forex Factory, they're using the same name on there. And I'm like, really? You were looking at this 12 years ago and you're back? Again, looking at the same thing over and over, just hunting. It is out there somewhere. Indiana Jones, they are basically never going to find it. It was a film. It doesn't exist. Anyway, right. So I'm back next week, Monday, as usual. Just going to hold these positions on the DAX and the FTSE. So one or two things is going to happen at the news. Either going to hit target or stop out on the DAX, in which case I'm locking in a minimum of 200 and $300 pounds, even this is a count. That hedge is going to be about 250. So worst case scenario today is £50 up. Best case scenario today is that rallies and I can get some profit out of that. And then obviously I'll watch the indices this afternoon. So good morning so far. Great day yesterday. Position trader EA, the market OLB and SIH strategy is killing it at the moment. And obviously with the euro, watch out in the next hour. So we've got news coming out today for the flash estimates. If they come out as forecast, we might not get anything because we had a lot of movement yesterday, but we should get some kind of volume out of it. And then we've got CAD and PC this afternoon, and that's it. So back on to Monday. Monday is a bank holiday in the US. I'll stream as normal on Monday morning because we'll be around, but Monday afternoon is dead. So we'll have light volatility, light volume on Monday. So I will do the weekly analysis because we'll have a look through everything that's coming up next week. But there's no news at all on Monday, so it's going to be a dead day. So hopefully they unravel a lot of stuff today. We've got Swiss CPI coming out. That's going to be a fairly big one. Manufacturing, Bank of Canada rate forecast to drop again. PMIs, non-farm payroll. Obviously, it's first week of the month, isn't it? So yeah, non-farm. So yeah, busy week next week. So and second week of September is when it tends to really start to get back to normal, and that's when we've got the euro rates coming out, and then obviously the week after that we've got the US rates. So and then we've got the pound rates as well. Oh, look at that week. We got CPIs followed by CPIs followed by Fed rate followed by FOMC press conference followed by the unemployment rate for the Aussie followed by the pound interest rate followed by unemployment followed by the Bank of Japan interest rate, and then we've got retail sales for the CAD and the pound. So week commencing the 16th of September, nuclear bomb. That's going to be a big week. That's going to be fun. So I need to get that EA built so that we can test the news hedging strategy, because that week's going to be the week where you're going to really want to use it. So we'll see. Right, so I'll be back on Monday. Anything you need, let me know, Telegram or Discord. Other than that, wait for the news and see how we get on. All right, so have a good weekend, and I will see you next time. Have a good one.